Today we have Sebastian Amiva, who's well known in the M&A world. He doesn't only just do deals, he helps people do deals as well. He teaches people how to do business acquisitions in the space. He comes from Patagonia in Argentina, and it's a pleasure to have him on the show today. And he's done deals cross borders, in different continents: UK, Europe, America, and Canada, and hopefully in your own country as well. I don't know about, but Sebastian, thanks very much. Welcome aboard. And can you just do a little introduction, who you are, where you're from, and how you got into M&A?
Yes, thank you very much, Dan, to having me in your podcast. So this is amazing. I love this topic, M&A. So I got started back in Argentina, right? I started when I was 24 years old, when my mentor teach me how you can buy a distressed company for $1, basically. In the beginning, I was a bit skeptical, right? I didn't believe that you can buy a company for $1. And of course, you buy in a big bag of debt, right? So my first deal was a distressed company, 200 employees. I was only 24 years old. I wanted to become the CEO. I wanted to restructure a company, but I didn't have any clue about, the M&A space. So after 6 months, we bankrupt. All these people lost their job, and I felt very sad, very sad. It was very depressing moment for me,
You only learn through getting scars, don't you?
Yeah. And then I realized that instead of making millions of pesos, which is not much solid currency, I decided to move to the UK. So I set up my office in London, in UK, so a family office. And from there, I bought some businesses in Europe and also in Latin America. Just by setting up the holding in London, we bought the biggest LED factory in Brazil, 700 employees, 22 million euros in assets. That was a very good deal that makes some good money. And then I bought a football club because I like a little bit football, as every Argentinian people. So I bought a football club, third division in Spain, not Barcelona, not a big one, but I bought a third division. And then I bought the consulting company in the US, trucking company. Fantastic. This is by myself. Then I did deals with my clients, because I help people to get started into M&A, and also I help business owners who are running a successful company to grow by M&A.
Let's reverse back up, because that's a lot of information there for everybody. But on that, the first deal, distress, that obviously when you buy a distressed business, that's a lot harder than buying a profitable business in an LBO. But obviously your second business, 22 million in assets for literally your first business, because the first one was distressed, different kettle of fish together. But your first profitable business, 22 million in assets. That's a fair mountain to climb on your first deal. Can you tell us about the structure of that deal? What kind of profits it was doing, what kind of cash at bank, what kind of creditor debtor book, and how you structured that deal?
Yeah, correct. So they have 22 million in assets, right? It means machinery, equipment, all the real estate from that company. So it was a Brazilian company, right? So what we did, we set up the holding company in the UK to raise funds there in a solid economy with our lenders, and from there we bring down the funds to Brazil. But we used the machinery, the equipment, and the real estate. We did evaluation with a big well-known firm like Deloitte, right? So Deloitte did all the evaluation, and we used the same appraisals and all the evaluation from the equipment, and we took a loan in the UK, and we used that money for down payment, and then we do some seller finance, right? So 30% of that money we put it on as a down payment, and then 70% seller finance in a 4 years balloon, right? In 4 years we pay the company.
And what kind of profit was it doing, this company?
This company was making like a 3 million per year, so net profit. Between
so it's 3 million a year, 250. So it's making 250 grand a month. A
lot.
Everybody listening, £250,000 a month he walked into with 30% down and 70% balloon, which means over 48 months you don't pay nothing, you pay it all at the end when you hopefully make the company better, refinance. But in terms of that 30% down, did you own day one 100% of the share capital?
Yeah, so what we did in that case, we keep 51% of the company, and we gave to the current owner 49. So that way it's easier to structure deals. Instead of because in that case you're using 100% of the asset as a collateral, and you get 51. So it's easier to leverage. If you want to get 100% of the cake, then it's harder to find the capital. But finding 51% was easier, right? And from this 51, we only find 30%. So we put 30%, we got 51%, and we start doing the management of the company, getting 300K per month. It's not too bad. We were 3 partners, so it's okay. But most of that money went to do the seller finance and also debt repayment, right? So it's not profit, right? What's profit, but we use the profit to pay to the seller and also the debt repayment, right?
So just to clarify for one, is we're talking about a company that has 22 million in assets, been around for a while, 250,000 pound profit a month. He walks in, gets majority share in the company for no money down. All the money is raised on the company's assets as a leverage buyout. So the money's raised on the company's assets, and the assets are 22 million. And all you need to do is raise, how much was the 30%?
Yeah, so we raised 2,200,000, right, from private investors in the UK. We put that money, we got 51%, and then the company also has some liabilities. They have 22 million assets, but they have like a 6.5 million in debt, right, with 4 different banks. So what we did, we restructured that debt. I became good at the restructuring debt, not much. This one was a cash flowing positive, but it has 6 million point 3. I don't remember what, 5 years ago. So, and then so we restructured the debt. We put that money. We got 51% of the company. It was a very big deal, big exposure. We were in the news, in the television, right? 700 employees. I was very excited about this. I felt very happy.
That's absolutely awesome. And what was the just so everybody knows, when you walked in, obviously you raised the money from the UK investors into a holding UK that owns a subsidiary in Brazil, and then 2.1 or 2.2 day one for the 51%, and then obviously the balloons 4 years down the road. What was the net free cash flow? Did you take a management charge along the way? Obviously, but roughly give them an idea of how much on your first deal, no money in, no money down, what kind of management charge you could take on this deal? Yeah,
you can take, so when I enter into a negotiation table, when I analyze deals, I like to get at least 200K, at least net per year without me being involved. Right? For that, you need to have a good deal with a solid EBITDA that you end up with a 200K, and also your partners, right? Because I was doing with the 2 partners more. So 200K each minimum per year without you being involved. So you can move on to the next deal. You can purchase a sign-and-share companies, so you can do different kind of M&A strategy. So 200K for me is the number, 250K per deal, right? If I'm not making that money, I'm not getting into the deal. And also, it's not about the money, it's also about the time. I don't want to get involved on the management. So I'm good at buying companies, and then I delegate the management. We put a CEO, right? We brought a CEO with 10 years of experience into the lighting industry. They've been running the company for us. We just collect dividends every quarter or every 6 months or every 12 months, right? So
happy days.
Yeah, happy days, yeah. It's all about positioning yourself as an investor, delegate the management, and collect dividends. Then you replicate the system, right? Then at that time, I started getting a lot of cash flow. So then I fully focused on buying more deals. After that, I bought the biggest paddle court in the world in Madrid. And then I bought the football club in Cantabria. Then I started aggressively buying more deals.
So a football club. So you're in Brazil buying LED, 700 employees. And now you're in Spain buying a 3rd division.
Crazy.
Which obviously doesn't make money, I would imagine.
No. So football clubs are just for for your passion, but it's not really profitable. You need to have a big sponsors, and it was 3rd division. I was hoping to take to 2nd division, so then you can start seeing the money. But it was very difficult. I was spending a lot of money out of my pocket, right, to pay all the salaries, all this, the sponsors are not big. So I was spending my money and supporting 22 players. So I had fun. Then I sold it to a Chinese group, and then I bought this big paddle court in Madrid. 22 indoor paddle. I don't know if you know paddle. It's similar to tennis. Paddle. Very very famous. So we keep it that for 1 year also. Was a good deal. Was making 35K monthly. No big profit. 35K euros was okay. So it's no big deal. So no big deal.
Yeah, so see from your first deal, which is quite a big deal, you obviously had a mentor, because you don't go from no deals to then into £22 million deal.
Correct.
Yeah, so
Correct.
you had somebody on your wings that's done deals before, taking you through the whole kind of process, because there is a process, and
Yeah, it's a process. It's a process to become qualified buyer. What I call it qualified buyer.
yeah, and this,
Most of the if you want, I can walk you through to what I mean for buyer, qualified buyer.
well, I'd love to do that. Before we get into that, right
Yeah.
now, what are the kind of KPIs of your kind of deal, the kind of deal that gets Sebastian out of bed in the morning? If a deal comes in, meets these what's the kind of five criteria that you go,
Okay.
I'm on it? Obviously, asset heavy, number one, EBITDA heavy. But what are the other things? Is it any industry or the specific industry?
Yeah. So what I'm looking for is asset heavy deals with at least 50% of the balance sheet must be full of assets. Assets like machinery, equipment, real estate must be 50% of the balance sheet. With an asking price of $500K to $5 million, just to make it easier for the lenders, because the lenders also, they like this kind of deal side, $500K to $5 million. But for me, $500K is too small, right? Because I try to think in terms of, I need to make $200K out of this deal, possibly, without me being involved. So at least must to have a $600K EBITDA, 600, 700, yeah. With an asking price of 2 million, 2 million, between 2 and 3 million maximum. So this is my acquisition criteria, and the industries can be warehousing is good, logistic, trucking companies. Trucking companies I like very much. Trucking companies. Trucking, yeah. Very simple, because you have the client, the trucks, and maybe some real estate as an office, and then you can use all of them for as a leverage to bring funds. So trucking companies are very easy to buy. Maybe the easiest sector. Trucking. Warehousing, some hospice houses or healthcare deals also are interested. But sometimes you need a license, or you need to have a doctor, or this is not easy healthcare sometimes. So we prefer trucking.
A lot of regulation as well. I take it you don't like regulated spaces,
Yeah, I don't like it. No. Yeah.
I'm the same. We're looking at an engineering kind of roll up just now, and
okay.
Asset heavy, EBITDA heavy, been around for decades. Second generation, it's just really good sector. I really like it, and a lot of them have the commercial property. They own the property, which is great, for a sale and leaseback. But so what other kind of KPIs do you look for, in a deal?
Also must be established company. Minimum 5 years on the market. Minimum 5 years on the market. EBITDA must be plus 600K with an asking price between 2 and 3 million. This is a perfect deal, right? The location, of course, we like the US, UK, Australia, and Canada, because the same M&A principles, you can use it on those 4 countries, right? It's kind of similar. The lending facilities are similar. The investors also, they are aware about LBO acquisitions. So I think those 4 markets are very good. So the location, those 4 countries, EBITDA 600K, established companies with at least 5 years on the market, and also a potential management in place, right? So I look for somebody, we can move up somebody from inside the company to become the CEO, or we bring an external CEO and put them in place. Another good thing is I try to keep the owner for at least 3 to 6 months, coaching the new management for a smooth transition, right? That is important.
What we're doing in our kind of roll up we're doing right now, they're staying in for 3 years. They're not
3 years. What?
Yeah, so it's kind of it's almost like a collaboration. They're staying in for 3 years, and over the first 9 months, they've got to train somebody to take them out of the position, so that when we sell, they're not on the organization chart, But nice. They're in for 3 years, and that's just the deal. And that's KPI. They're great KPI. What about someone starting out? What is your go-to number one Pareto principle for deal flow? Getting
deal flow.
Yeah. What is it?
Yeah, deal flow. So for me, deal flow, you can do it 2 ways: off market or through brokers, right? So my favorite one is off market. Right now, people know me about the M&A experts, so they send me deals all the time, brokers and consultants. But if you're starting from the scratch, the best thing to do is to find off market through consultants in your industry, lawyers, and CPA accountants. Why? Because if you want to sell your company, you will tell that new to 3 people: your wife, your accountant, and your lawyer, and maybe your consultant, right? So absolutely. If you can create a script with your acquisition criteria, location, asking price, EBITDA, right? And then you can send it out to consultants. If you are in engineering, industry, for example, or manufacturing, you start targeting all the consultants in that industry. And also, if you contact lawyers or accountants, they maybe have a client who want to exit, who is matching your acquisition criteria. And then what I do is I pay them an introduction fee or a referral fee, 10,000 to 20,000. It depends the deal. So we pay between 10 and 20,000 if we successfully close the deal. Right? Yeah. This is what I do with the consultant is working more, right? Sometimes e-commerce or manufacturing or trucking experts. So we contact them and they refer deals to us and we pay an introduction fee. This is how I do.
Yeah. We pay an introduction fee, but usually our go-to, believe it or not, is direct mail. You know, so we get we buy data and then we qualify the data, we do some research, and then we direct mail with a personal letter. You know, it's
physical letter you send them.
Yeah, old school.
what is like the open rate or the answer rate is
well this we sent out 1,000 recently. We've got about 30 people responding, but 20 deals that signed the NDA. And then we've got 16 on the board, and realistically we've got 6 that are serious, you know.
Okay, that is good. 6 is pretty good. For one shot.
I only need one. Hopefully
you need one. You're just one deal away, right? People say just one. Just one.
I mean, going back to that second deal you did, you know, you're basically, your management fee is 200 grand a year.
So I try to get 200K. You know, if I'm partnering with someone else, it will be 400K, right? 200K each, because is the number that I like, 200K per deal, right? So if we have, you know, 5 deals per year, we close 5 years, is 1 million, right? So it's a good margin for not doing the management, right? So I don't do management fee. I collect dividends as an investor, right? So I got shareholding position, or my company became a corporate shareholder, and then we collect dividends every quarter or every 6 months. It depends, right? But it's better for tax purposes. But 200K minimum is the minimum. I'm not saying every deal must be 200K, but 200K is the minimum. Some deals can be 500,000, some deals, you know, bigger ones. But for the bigger ones, it's difficult for my position as an investor, and also I don't want to add personal guarantees, so I don't want to put my houses, you know, on the as a collateral. I don't need to take risk right now, right? So I took a risk before, you know, 8 years ago. Right now I don't need to put a PG, I don't need to put a collateral. I just do seller finance, you know. I bring an investor with me to co-invest, but I don't even put the money. I co-invest with people. They give me 500K and we buy $5 million deals. But right now I don't need to risk, right? So this is a good thing.
So you basically get the investor, you get the deal, you get the investors, and you structure the deal yourself without any money in, but more importantly, no PGs on any deferred.
No.
And on the deferred element, you know, what's your best kind of deferred element? Obviously, that 4-year balloon is pretty good. No PGs on that at all, on the 4-year balloon?
No, they can put a lien on the properties, on the tracks, and, you know, they can put these kind of things, right? But normally they don't want to wait that long. But if it's a motivated, they can wait 3-4 years balloon, right, to get paid. And also that means they believe in the company cash flow, right? They believe in the company cash flow. So absolutely. 3 years. I normally do this. Sometimes I like to buy only 51% of the company. To don't make it obvious, I put 55. You know, so that give you the majority. You control the company. So 51%, 55% is good. It's better to have 55 than 100 sometimes, right? Because it's easier to use 100% of the company to get 55, which is good. 55%.
No, absolutely. You don't have any involvement because whoever's there is still there, and if they're gone, then you brought someone else up to be the ND kind of thing. Yeah. Correct.
But sometimes they want to fully exit. They say, no, Sebastian, I don't want to keep 45. I want to fully exit. Okay, what I can do is I can put 10% down payment cash. You know, if it's a $5 million deal, I put 500K down payment from an investor, right? I give the investor 20%, so they double their money in 1 day, right? So I give 20% equity, I keep 80, and then we do a deferred payments, right, with the seller. Yeah. Sometimes they can take the money from the bank account. Sometimes they have in the current bank account, maybe they have 700K, 500K. They can take it out, empty the bank account before they sell to me, and we can use that as a down payment. Or they can take a track or something, or a piece of land. You need to to analyze the deal before, right? Do a deal analysis and check out which kind of asset you can give away. You know, sometimes you don't need all the assets that the company owns, and you can take it out
and a lot of times you don't need all the cash that's sitting in the bank for working capital. You know, there's a lot of excess that you can use as a down payment. And we've seen a lot of negative directors' loan accounts that you can use as part of that exit as well for the down payment. You know?
You need to be creative, like you say. You need to be creative, right, with the down payment. Right, everybody wants a down payment. And another misconception is the no money down deals. For me, no money down deal doesn't exist, right? So it's unrealistic. Every deal you need to put money. It doesn't mean it's going to be your own money. For that, I have an investor list, with people with 100K, people with 1 million, with 500K, 600K, and then I have my investor list. When I find a good deal that is cash flow positive, that in 5 years on the market, that is full of assets, 50% of the balance sheet is full of assets, then I contact the investor, say, listen, I got a very good deal. I need 10% cash as a skin in the game. I'm gonna double your money in one transaction. I'm gonna give you 20% equity. Right? So they get 20% equity, they give me only 10%, and then I distribute the dividends every quarter, every 6 months. It depends what we agree on the partnership agreement.
Absolutely. And going back, obviously getting into M&A, you've obviously had influences in your life. Who's been the biggest single influence in your thinking to get into M&A and how to do it? Who's been the number go-to guy for you? If you look back and think, when I met him, it all changed, kind of thing. Who is that for you, Sebastian?
I was reading a lot of books about entrepreneurial, careers, and then I found Richard Branson is one of my biggest inspiration. In terms of doing LBO strategies. He recently did 200 or 300 million SPAC, right, in the US to buy airlines. So he's active on the M&A space. So I've been studying him for a while. Richard Branson, he owns more than 300 companies. So he is one of my biggest inspiration. I try to go to his island, this year, hopefully, but the COVID situations make it difficult to travel right now. So yeah, Richard Branson is great, buying deals, and then he's very smart and setting up and using his credibility and his reputation for doing the fair payments. And I was checking out how he structured deals, and I bought, of course, all his books. So I think since I started reading from him, I learned a lot about taking risks.
Yeah, that was an incredible story he had. Remember when he had the record shops and he had the airline, and it was one or the other. He had to give away one or the other. And he sold the record shops at the absolute peak, got 530 million. And away it goes with obviously the airline. And the rest is, history. But he was back to the wall with the banks. And they said, if you don't sell one, we're taking you, He was always taking a risk, even at that level. He was a billionaire at the time, and he was taking that kind of risk. So it's all on the line kind of thing.
Unbelievable.
I know he is. He's unbelievable. He doesn't take that kind of risk. He does take the risk, but not all on the line now. It's all independent, siloed, offshored, and the whole 9 yards, It's on my bucket list as well to get to his island.
We should organize a mastermind there, an M&A mastermind at his island.
That would be cool. That would be super cool.
I know. So it's a bit. I didn't have any physical person like a good, because I came from the scratch. My family is not a rich family, so I made my deals and my money just by myself. So I didn't have a model to follow. And also, I was from Patagonia, Argentina, which is the the end of the world. It's just farm, lakes, and mountains. It's not much view. So my hero was Richard Branson. The big businessman out there, Elon Musk, and more Richard Branson. So I was following him, and I realized he did a few LBOs, and then I started to study LBO acquisition. I went to Harvard School to study negotiation, as I realized negotiation is one of the biggest, the most important skills to have it, right? So negotiation, you can use street smart negotiation, but also it's good to become a professional negotiator in terms of what to say or how to prepare yourself before you enter in the negotiation table. Right? So,
and what are you working on now, Seb? What's your latest and greatest deal you're working on just now?
Right now I want to do so I want to do a SPAC, right? So this is what I'm working right now. I want to set up my own SPAC in Sweden, in Stockholm, right? Because I believe that the stock exchange is liquid. The liquidity is high. and it's one of the most solid in Europe. So I want to set up a 100 million SPAC. I'm trying to target companies, with a couple of investors. But of course, it takes time to do all the legal paperwork and to set up an SPAC there. Is you can do for a cheaper price also, 200K, 300K, you can set up an SPAC. In the US maybe 1 million, so it's 3 times more. Yeah, maybe legal fees, auditors, accounting fees. You spend, so Paul Roberts, so a guy who I interviewed last week, we posted his interview on my Facebook group, and he explained how he raised 100 million already. He raised already 100 million, but he spent like almost 1 million on fees.
On fees.
On fees, yeah. Setting up fees, and also they help you to bring capital. So that big legal firms, they help you to pull investment. So he raised 100 million, but he spent 1 million, right? So it's, you need to take a risk.
Yeah, but the thing is, the 100 million, is that equity or debt, or is that?
Yeah, no, they have in an escrow account already 100 million. So the investors put 100 million, and he got 14 months to find a target company, right? So they targeting companies with 400 million revenue, right? So it's a good vehicle, right? Doing a SPAC, and Richard Branson done it already. So I want to follow his.
I know, absolutely. He does well. I mean, Richard Branson has raised a ton of money over the time, but doing a SPAC right now is the most fashionable way to raise money. Yeah. It's absolutely insane. But
it's sexy and cool also. Well, you say, why you want to do a small deal, 500K, when you can raise $1 million from a private investor? You pay to the biggest law firms in New York to set up an SPAC for you. And then, of course, money will follow. You have a great team, a good acquisition criteria. You have the biggest law firms in New York working for you, the best auditors. Money will come to you, and they help you also to raise. It's not you paying fees and then good luck. They help you with bringing investors. You can use their office. You can use their network, right, which is huge to bring funds. And 100 million for these firms are no big deal, right? So 100 million.
I spoke to a hedge fund end of last year, and 100 million was a starting point. If you're not
minimum,
if you're not plus 100 million and multiples of 100 million, we're not even interested in having a conversation.
Right.
It's
before setting up a SPAC, of course, you need to have a good deal hunting strategy, right? Because you have 14 months. If you couldn't find any good deal, you need to give back the money, and you lose 1 million on fees, right? So you have a deadline. You have 14 months to close the deal. If you don't close it, then you need to give back the money to the investors, and then
but the thing is, on those kind of things, you can make sure you got a deal beforehand.
Beforehand,
kind of lined up. To reverse in there, so at least you get one away to pay for the fees, like your Brazil.
That's a good idea. That's a good idea. Yeah, I know.
Reversing your Brazil deal into it, just so you're away straight away.
They want to exit, so a good way to exit would be go public, right? So for them, and also you becoming the owner or the majority shareholder, that is a good way, right, to do an SPAC. Having a few lineup would help, I think so. So you are not stressed. You're not stressed about the 14 months deadline.
So that's your big, that's your goal this year, Sebastian.
So this is my goal.
Yeah, and have you got your team all lined up to do that?
Yes, I have the IPO expert in London. So Ben Hedenberg is my partner, right, for consulting IPO. So he's gonna start setting up this. For us, we're gonna do some canapés and champagne drinks at the office in London for pulling some investors, right, for the pre-IPO, pre-SPAC. So it's very exciting. I want to put some of my own money. I want to take a risk, put a chip on this, because this is one of the biggest one. I want to do a 100 million deal, right? So I started with the one SPAC. Then if it works successfully, then I want to do a 200 or 400 million one, right? But I think 100 million is big enough for me right now.
It's big enough, and it's the minimum you get in the door with these guys. If it's not 100 million, they don't feel like they can take their £1 million of fees. So it's got to be a certain amount of money to pay those kind of fees. But so that's great. So you're working on a SPAC, hopefully raise 100 million on a Swedish, potentially go public on a Swedish exchange, or maybe raise a SPAC on a Swedish exchange and then go public in the UK LSE.
Yeah, double listed.
Yeah, which is pretty exciting. That's pretty awesome. So imagine if you started again.
Yeah.
You know what you know now. What would be your advice to someone starting out? Or obviously you help people actually do M&A, which is pretty cool.
Yeah.
So what do you tell them? Because obviously you've been through the experience. You've got the trophies, you got the scars. So if someone was starting with you right today, right now, what would you tell them? This is what you do to shorten the curve, kind of thing.
Yeah, before doing the deal hunting, because a lot of people reach out to me and say, Sebastian, I found a $10 million deal, I want to close it. And they don't can even buy a sandwich, right? They don't have the money to purchase the business. I say, listen, what is your acquisition criteria? What is your acquisition strategy? Do you have proof of funds? Do you have your lenders network? Do you have an investor network? So I would suggest to them to start building from now their lenders network, the investors network, because they will need some skin in the game. They will need money to close a deal. No money down deals exist only if you buy in a big bag of debt, a $10 million company with a $10 million debt, which is worth $1, right? So developing your lenders network. When I say lenders network, is cash flow lenders, revenue lenders, invoice lenders, asset-based lenders, right? The alternative finance market, no traditional banks. Then investor network, right? People with 100K, 200K, 500K sitting in savings, right? You need to have a few of them line up. After that, also trying to get a soft commitment letter from some trusted lender who can give you, let's say, a $1 million or $5 million commitment letter as a proof of funds. Because the seller, the broker, if they can see that you are not really qualified, they will say, okay, show me you got the money, show me proof of funds, and a soft commitment letter could help to do that, right? I do this for my clients. My trusted lender can issue me a $5 million commitment letter so I can show proof of funds and then start gathering the financials. If not, they are not going to disclose the information. So lenders network, investor network, proof of funds, and a proper acquisition criteria, knowing what you're looking for, and most importantly, trying to communicate to everybody must to understand what you're looking for. I'm building a pitch deck, website, corporate email, and it's it. You don't need much of this. And
and then someone to guide you through the process, because every single step of the way there'll be problems, issues, challenges that you need to provide creative solutions to those challenges. And that's where experience comes from. So having somebody like you in their corner will undoubtedly collapse time to get the same kind of results. But more importantly, you'll stop them making mistakes, because it's the mistakes, like the game of snakes and ladders, that take you back, 5 steps instead of going forward. If you just avoid the mistakes by having someone to phone up and ask, that for me is half the battle, And you provide that in your kind of M&A business buying club, yeah.
Yeah, so what I do, basically, I was thinking, for a long time, what is the best way to teach M&A to somebody who is starting out or somebody who is running a successful company? And I realized then that the best way is doing like a partnership program, working one-on-one with people and walking them through the entire process, jumping in a conference call. For example, you are my partner. We start together, and then I help you to chat with investors, with the seller, with the lender, with the broker, because you have no idea how to communicate with them. So you will need me during the entire process until we close a deal together. Then you're gonna replicate the system and do it by yourself. But I believe people must have somebody who can walk you through the entire process from the beginning, from preparing yourself as a qualified buyer until closing and post-closing. Then you can do by yourself. It's like a baby step. You need to have somebody who help you, right? Who help you with the first deal. Then you can do it yourself. This is what I do. I do one-on-one. We have weekly calls, one-on-one. I introduce you to my 7 lenders, right? And I give you proof of funds. I give you all the tools, template that you need to close a deal. So that way, the success rate is higher, right? Than starting by yourself or reading a book or or hiring a consultant.
Yeah, and when you come up with a challenge, which invariably they do all the time, you're always there on the phone to answer that and help them through that challenge, kind of thing. Yeah, and
they got my email, my personal WhatsApp number. They got full access to me, and I take 50 people per year. I don't have much time, so it's very boutique. 50 deal makers, and I try to have a success rate of 30% at least. Right? Some people quit for different reasons. They move, or somebody died in their family, or some issues. But normally 20-30% success rate I have with my clients. And not only that, I qualify people. I'm not taking everybody on board. Because I charge a flat fee for 12-month program, but I also get equity on the first deal, right? So if you don't close a deal, I make 10,000, which is no big deal, and then I don't get equity. So I need to pick winners, right? I want to pick people who really is hungry. I don't mind if they have an MBA or where they live, or if they are poor or rich, or if they are hungry, if they are committed to close a deal, because you need to spend time on the phone, calling brokers, trying to find the right deal, convincing investors, right? You need to convince people, being good at sales, at marketing, and negotiation.
At the end of the day, for me, it's a people business, and that's what it is. That's where it starts and ends, a people business. And after that, it's all about solving creative solutions to problems. Because when you're faced with a vendor saying, I want £1 million down, it's okay. How do we get this? Not, I can't do it. It's where do we get the £1 million? Right. Or how can we chunk that £1 million down? Or how can we chunk it into half up front and then so much over time? And it's really about just not giving up and just completely always bringing up a creative solution of other alternative ways to do the deal. And that's really it. Until you get to the point where, boom, you both agree. And that's all it is, isn't it? It's really just keep on going on until you get to the point where two parties agree. And you can go.
Also removing the limiting belief. People think that that is not enough money out there, that who the hell is going to give me 100K to co-invest with me? People start doubting themselves. And I believe it's a ton of millions of dollars waiting for you, right? A lot of millions of people, they have 100K in their bank accounts as a saving, right? So they don't know what to do with that money. They don't want to know. And M&A is a very safe baker, right? So you should pitch them, and money is out there. Money is out there.
Imagine, what is this? This is February, nearly March. Bleeding hell, where's the 2 months gone? So we're the end of this year. You've raised your £100 million. Your SPAC, your SPAC in Sweden, and you got £100 million sitting there in a SPAC. What's your 5 targets, or 2 targets, or 1 target? What are you going to spend the money on? What are you going shopping with?
Shopping. Yeah. I like telemedicine, telehealth is an industry that I'm targeting. I don't like to talk about that because I don't want much competition. So telemedicine, telehealth is a good industry that I've been searching for a while, and I have a good connections there. And then I identify a potential targets, right? So I think in that sector I will focus on telemedicine.
What do you mean by telemedicine? Obviously, medicine health, you understand, but what's telemedicine?
People can book a doctor, or get a recipe through online, right? Not going to the hospital, right? So
so virtual doctors, basically. Yeah.
Virtually is a few big companies that I'm interested to do, or some roll-ups, right? I'm interested to do because it's not really well known, that industry. So I spent some time, and I think I could do a big impact with that SPAC. Right? I have a few doctors lined up with 20 years of experience, somebody on the board to make it more credible. Right? You need to have experts. I'm not a doctor, so I need to have doctors on board and people who really understand that industry. Right?
Yeah, but I think the key thing you've just said there is, I'm not a doctor, but you're thinking about going into a very regulated specialist space. So for everybody listening, what Sebastian said here, he's bought a distress, didn't like it. He's bought the biggest LED manufacturing in Brazil, 700 employees, football, team. Now he's talking about medical stuff. You do not need to know about the space, but what you do need to know is surround yourself with people who have got decades of experience in that space, to fill the board if you want to do this kind of thing. I think that's the critical factor here. What you are is you're the kind of the conductor in the middle of the orchestra, and your orchestra is your board, and then the company's kind of thing. And you're
the organizer. Yeah, the organizer. You organize everything. You don't need to know. People say, Sebastian, what do you know about making evaluation for this industry? I say, okay, I'm gonna call my evaluation expert, and he will tell you. I don't know all the answers, and I don't know about telemedicine, but I think it's a sexy sector that I really like, and it's a lot of very good deals out there, and I want to take it. And then you have in the UK, for example, a non-executive director association. You just call them and say, can you find me somebody with 20 years of experience, with some awards, some very well-known doctor with big awards from big universities, and then you just pay a fee for one annual general meeting and just for being on your board. You find the best one in UK, and then somebody who is retired already, and somebody who lists their CV on non-executive director association, and
yeah,
it's
I'm looking forward to hear about this story unfolding this year.
man.
Sebastian's
Yeah.
£100 SPAC buying up medical. You know, VA doctors. I love it. It's a great space as well, and it's a growing space. You know, I think that could go down well. So we're going to have to do this again, so we kind of
please
unfold the story over the year. You know.
Anytime we need to follow the process. I will keep you updated, and we can do maybe a second one talking about specifically about the SPAC.
Yeah, that would be really interesting, actually. Do another chat about how to go about setting up a SPAC to raise £100 million, you know, and that's the objective. So how do we set up a SPAC, raise £100 million? What's the fees involved? Who do you need to speak to? All that kind of stuff, you know. Right.
I think it's the shortcut. I think it's the shortcut doing an SPAC. I've been realizing, but I don't know, because I can tell you if it's gonna be everything perfect, because I haven't done it. I'm doing it in the process, starting, you know, all the pre-SPAC, but of course, I believe it could be a shortcut because it's a big acquisition, or a couple of big acquisitions, and it's 100 million, and then you can end up with a big you know, chunk of shares. You know, I think it's exciting and something that keep me active also, right? Doing something interesting.
Absolutely, it sounds good to me. But anyway, how can people get in touch with you, Seb, if they want to join or apply to join your M&A deal team kind of thing, or become a mentee? How do they get in touch with you?
If they want to co-invest with me, if they want to get personally mentored with myself, they can go to my website, sebastianamiba.com, or they can join the Facebook group, which we are 10,000 members. It's called Buying Businesses for a Living. The Facebook group, they can join there, or they can find me on LinkedIn, Sebastian Amiba. I'm very reachable, right? I'm not putting my VA in front of everyone, right? Saying, talk to my VA. If the message makes sense, I will reply.
Yeah, fantastic. Awesome. Sebastian, it's been an absolute pleasure chatting to you today, and I'm really looking forward to the journey going forward and our next chat about SPACs. That's going to be awesome. But for today, thank you very much. Thanks for coming, and we'll see you all next time. Tune in next time. The details below, if you want to get in touch with Sebastian, will be below here. His website, his contact details. If you want to get in touch with him, apply to join his mentorship. But tune in next time, and we'll find out how Sebastian, his next steps towards getting this SPAC, this £100 million SPAC shell put together. And we'll tune in for that. I'm really excited. Can't wait to hear about it. So thanks very much for coming, Sebastian. Cheers.
Thank you. Thank you, Dan. Thank you very much.